Hey traders, it's John Fortune here with this week's weekly Forex forecast for the 31st of August to the 4th of September 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we started the week up in this area, and we mentioned the fact last week that the dollar index was lacking momentum. It was starting to form potentially what's known as an ending diagonal, where it comes down, takes the lows, and it starts to bounce back. This kind of choppy price action is very often indicative of a final wave or perhaps a fifth wave. But as we've noted in previous videos, the trend has not yet reversed. A lack of momentum is not the same as a reversal. So as it stands, we are and still have been looking for further declines to the downside. Last week, we were looking for a sell-off in this area down towards the 91.99. We came very close, but we have not yet achieved this target. So very simply put, going into this week, any pullback in the dollar index is once again going to be viewed as an opportunity to look for further declines down towards the next key of support to the downside, the target set at the 91.99. And if we can get a breakthrough here, we're going to be looking down towards the next key of support to the downside and target 2 at the 90.95. So although we won't be looking at trading the dollar index itself, we are going to go into next week with a bearish bias. And even though we are lacking momentum, we still favor dollar short positions until we get a near-term reversal in the dollar. The next market we're going to look at is crude oil. Now, last week we started the week in this area and we were looking for a rally into the 43.69. We came very, very close within a few pips of the target, and we did have a nice rally to the upside. The uptrend in crude oil is still intact, and we do favor long positions as a result. Since we did not take out the 43.69, we are still looking for this to be taken out. So any pullback going into next week is simply going to be viewed as another opportunity to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set, with 43.69. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance, the upside, and target 2 at 45.53. The next market we're going to look at is euro dollar. Now, just like in the dollar index, the euro dollar is starting to lack momentum, but the uptrend is still intact. And last week we started the week down in this area, and we mentioned the fact to pull back towards the 1.1749 should be viewed as an opportunity to look for a bounce to the upside. We did get a bit of a rally, but generally speaking, we started the week here and we ended the week here. So we did finish to the upside, but we did not really have any strong moves in euro dollar. Very simply put, going into this week, any correction back down towards the 174.90 is simply going to be viewed once again as another opportunity to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside, and the target set, the 1.2050. So the next market we're going to look at is pound dollar. Now, last week we started the week down in this area, and we highlighted the fact in last week's video that this was a great place to start to look for a rally to the upside in pound dollar. We did have a very nice rally from this area, and we came very, very close to the target. This was a target from last week. We just stopped a few pips shy of this. So very simply put, for anybody not involved from last week, any pullback here before we take out this target is going to be viewed once again simply as another opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set from last week, the 1.3364. And if we can get a breakthrough here, and it may be the case that we start the week here, we take out the target and then we pull back. And if that happens, we'll be looking up towards the next key of resistance, the upside, and the target set at the 1.3512. So the next market we're going to look at is US dollar Japanese yen. Now, last week we highlighted the 106.55 as a key of resistance in US dollar Japanese yen, where we could see a sell-off to the downside. We did pull back, and we pulled back quite sharply. Actually, we had these speeches at the Jackson Hole Symposium, so we had a bit of volatility here. But we did bounce from the 106.55, and we started to make our way down towards the target set from last week at 104.70. Very simply put, for anybody not involved from last week, any pullback in this area is going to be viewed once again this week as a great opportunity to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside, the target set at the 104.70. So next market we're going to look at is Aussie dollar. Now last week we started the week in this area and we were looking for a rally to the upside, and we highlighted two targets. We broke through the first target highlighted from last week. This was a really nice rally and we came very close to achieving the second target. We stopped just short by a handful of pips, the 0.73860. So very simply put, any pullback going into this week before we take out the target in Aussie dollar is going to be viewed once again as a buying opportunity, an opportunity to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and target 2 from last week, 0.7386. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2, the 0.7475. And notice that the Australian dollar was a very good performing currency market last week because of the remarks by Jerome Powell on inflation at the Jackson Hole Symposium. And as they are prepared to let inflation run higher, this of course affects commodities, and it's primarily beneficial in terms of currencies for the currencies which have exposure to commodities, so the commodity currencies like Australia, New Zealand, etc. So the next market we're going to look at is New Zealand dollar. Now last week we had a reversal to the upside in New Zealand dollar because once again of those remarks Jerome Powell made about inflation and the exposure to commodities that the New Zealand economy has. We are looking as a result for long positions in this market going into next week. You can see we're coming very close to the next target, so not much room to work with here. What we would like to see therefore is any pullback before taking out the target is going to be viewed as a great opportunity to start to look for bullish setups in this market. And we're going to be looking in this case at initiating longs up towards the next key of resistance, the upside and the target set, the 0.6756. Or the second thing we'd like to see going into next week is if we start the week by just taking out this key of resistance, we're in this area and we take out the resistance and then pull back, that will also be viewed as a good opportunity to start to look for bullish setups in this market. But in this scenario, we're going to be looking at initiating longs up towards the next key of resistance, the upside and target 2, at the 0.6825. The next market we're going to look at is US dollar Swiss franc. Last week we started the week in this area and we had a very steep pullback, but again, really, as we pointed out, this should just be viewed as another opportunity to short this as the downtrend is still intact. We did start to grind our way down towards the target set from last week at the 0.9000. We stopped just short of it, so for anybody not involved in this market from last week, any pullback this week, once again, towards the 0.91720 is going to be viewed as another opportunity to look for short positions in this market, and we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at 0.9000. And if we can get a break through here, you can see there's quite a lot of space between here, so we could move between these levels fairly quickly. But if we can break down below here, we're going to be looking down towards the next key of support to the downside and target 2 at the 0.8837. So the next market we're going to look at is US dollar CAD. Now last week we started in this area and we highlighted the fact we were looking for a sell-off down towards the next key of support to the downside and the target set at the 1.3081, which was right here. And you can see we did have a really nice sell-off down into this target set from last week. So US dollar CAD was a really nice move to the downside. And there was a bit of profit taking came in as we hit the key of support and we just ended the week in this area. So very simply put, the downtrend in US dollar CAD is still intact and we are favouring short positions in this market next week. Any pullback towards the 1.3210 is going to be viewed once again as another opportunity to look for shorts in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.2952. And last but not least, we have gold. Now, last week we started the week in this area and we were looking for moves to the upside, but we pretty much just moved sideways. We didn't really go anywhere last week in gold. We had a very low volatility week in gold. So very simply put, going into this week, we do have the makings of an inverse head and shoulders, pointing to a reversal from where we sit now. Any pullback this week in gold towards the 1898.77 is going to be viewed once again as an opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 2014.32. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2 at the 2104.38. So our target for next week is 2014.32. but just bear in mind to come up to the second target may take 2 weeks because of the distance between this target and where we currently sit. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far, and also those of you who comment on a regular basis as well. I do read your comments and I do appreciate it. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.